A very warm welcome, traders, to this video, which is quite an exciting one on insider bars. So I'd just like to walk you through the world of insider bars. They are very fascinating, and it's actually something, for those of you that have followed us for a while will know that I've actually dedicated a large part of my professional trading career to actually working with insider bars. They're actually very fascinating, and there's a lot of research that myself and the team have done around them to help you shortcut your journey into the financial markets. And what I want to do today is just give you a very brief introduction and an overview to what these are really all about. So first of all, what is an insider bar? Especially if you're a newbie and you're watching this video, you must be wondering to yourself, what on earth is he talking about? Well, what is an insider bar? At a very basic level, an insider bar is simply a bar in which the current range is fully engulfed by the previous range just there. Now, you may have noticed that I haven't drawn on the opens and the closes on these bars just here. That's because at this point, the opens and closes are actually not really relevant. See, even if I were to draw on the opens and closes, it would make no difference whatsoever here. The reason for that is because insider bars are defined primarily by their range. So you can see the range of this bar, if we were to look at it and call that Y, and this bar just here, if we were to look at the range and call it X, you can see that Y is definitely less than X. And if that's the case in any market, on any time frame, we would class this as an insider bar. So this is, in a nutshell, what the mathematical definition is. Now, you may be wondering to yourself, maybe something like, what if it's just a pip or just a tick or just a point within, you know, being an insider bar or just not being an insider bar? Well, the truth is that as long as this is true, as in the formula for this range here, Y is less than this one here, X, then you have an insider bar. So whether it's a pip or a point or whatever instrument you're looking at, that's what we'd class as an insider bar. So that's the definition. Now, let me give you some interesting statistics on this. Now, for those of you that have watched the work previously, you'll probably already have seen this, or if you've seen Thiru's fantastic piece of work on the 4-bar patterns and the 256 permutations, you already know this number is true anyway. But always worth going away and testing, actually. If we're teaching a concept here on the market, always worth not just taking our word for it, but actually go and pull the data out of your broker and put it onto an Excel spreadsheet and test some of this stuff to see if it does actually hold true. This is the way in which you can build your conviction and belief very, very quickly. So there is a 10% chance of an insider bar setting up, and that is true on a 4-hour time frame and a daily time frame and above. So if you look at a weekly chart, for example, or even a monthly chart, you will see that the occurrences of the insider bars are 10%. And that is true basically on the 4-hour and above. Now, when you go below the 4-hour chart and you go to other time frames which are less, then you'll generally tend to get something that is not as valid, because at that level you just get a lot of computers trading the market and you get a lot of noise coming in, and these stats won't necessarily hold true. So this was actually tested on the daily chart, but I do know that it also is valid on the 4-hour as well and above as well on the weekly. And of course, it's one of those things where you can easily just pull the data out of your broker, put it into an Excel spreadsheet and test it. It's just a couple of simple formulas, look a little like this, and you can find out if this is true or not. So this is very much the status of insider bars. They do set up on the 4-hour and the daily chart, and time frames above that on a 10% basis. Now, why do they set up is the next question. So we know what they are. We understand the mathematical definition. But here's a good question. Why do they actually set up? So if you've been in the market for any period of time and you've seen any training or educational videos on insider bars, then the normal types of cliche statements that go out there, and believe me, I have mutual respect for all the trader training companies out there that are in this space to serve and uplift people. But I do hear the same types of cliche statements being thrown out all the time. And people will shout out things like indecision. So people say that indecision is actually the root cause of insider bar setting up. Now that's only really partly true. We have to understand at a deeper level really what indecision is. And if you understand it from the perspective of the market maker's methodology, and this is what's really critical, you really need to understand the market maker's methodology. You understand the psychology of how the market makers are working, because these are the guys that are controlling the bigger money. These are the guys who are actually moving money around, actually making the ranges of the bars, and it's important to understand their psychology. So insider bars, generally speaking, are actually, can be called indecision, but it doesn't really mean anything to anyone. But actually, if you think about it, it's actually just a period of what we call accumulation. So accumulation, accumulation, just there. That's what it actually is. So this is not just something that you can say, oh, there was indecision in the market and the buyers and the sellers didn't really know what to do. This is actually just the kind of cliche stuff that gets thrown out there. What this actually is a period of accumulation. The market makers are very strategically gathering orders for them to then manipulate the market. And that's the next part of this presentation. What I want to do is show you how you can actually capitalize on insider bars. So for me to do this, I'm just going to take this out, and I'm going to go ahead and draw up actually a chart of an insider bar. And I'm actually going to show you a couple of different ways in which we can actually use these and trade with them. So one of them is certainly here you've got an insider bar. How can I actually capitalize on this? So let's put this into some kind of a context. So let's say that this is a part of an already established uptrend. So we are buying the market, we're going long, and we've got this kind of a setup. So you've got this happening in the market, and suddenly you get an insider bar in an already established upward trend. So what do you then do? Right, so how do we trade this? There are a couple of different ways in which we can trade insider bars, but our primary objective from trading with insider bars is to capitalize on the actual next period that's coming up, because you've seen what we class as a market compression or area of accumulation. You've seen that happen already. But what you want to do is capitalize on the next session, which is going to be a manipulation spike, more than likely, in the market. That's the next phase of the market maker methodology. The first one is the accumulation, the second one is the manipulation spike, and of course the final one is profit release, which we'll probably cover in another video. But what I really want to do is just give you an understanding of how you can do this. So generally speaking, after a market compression, you see an expansion taking place. If you think about the concept of a champagne bottle, and you pop the cork, and then obviously inside the bottle itself over a period of time, that pressure has built up. When you pop the cork, then of course what happens is the champagne comes out at a pretty aggressive pace. So does the cork pops out pretty fast as well, because that pressure was built up, and then what you get is a sharp expansion. Same thing here in the market. We're looking now to capitalize on that expansion. So there are a couple of different ways you can trade this. The first thing you need to do is decide on an entry point. So of course there are lots of different entry points you can use. You could use the high of the previous bar to the inside bar. Let's call it inside bar -1. Or you could, so this is basically IB -1. You could also use the insider bar's high just there. So IB's high. You could get into the trade there. Whatever you decide, always keep it constant and test, and then keep all your parameters constant if you're testing anything, and only vary one thing at a time. We did all of this research and we found an optimal entry point. And so really what I wanted to explain to you is this is one way in which you can capitalize an entry. Then you need to look for a stop mechanism. You can put a stop maybe below the low of the previous bar to the insider bar again, which is IB -1. So this will be your stop loss just there. And then you need a target point. So think about different ways in which you can exit the market for a target. Let's say you may want to take 2 times your trade risk. So that's your difference between your entry and your stop loss. If that's, let's say, if that's range is Z, then obviously up here you'd look for a target of 2Z. You'd look for Z times 2, and you'd look to get out of the market at that target point just there. So whatever your trade risk is, you double it and you project it forward. But what you really need to do is test the market, see what's going to be the optimal exit. Now, the good thing is with what we've done, we've already tested the market multiple occasions. I've come up with permutations of the insider bar trading strategy, which we then later on named profit expansion, which is just superb. And I have many more presentations on our website and our blogs and especially in the Traders Toolbox video series actually about this, where we go into an element of detail. So you should check that out. And be sure as well to subscribe to our other videos, because our other videos actually will have a lot more content in and around some of these things that I'm talking about. If they're alien or foreign to you, then certainly do subscribe for our YouTube channel, because you can catch all of the other opportunities and what's happening, what we're doing in real time. So this is really what I wanted to talk a little bit about. There are lots of ways in which you can do this, but what I wanted to say is there's one key tip that I would definitely give you, which is if you're looking for an exit in the market, if you're looking for catching an insider bar and catching the manipulation spike, what I would strongly recommend for you is not to stay in the trade for too long. So perhaps maybe only stay in the trade for 4 hours, 12 hours, 24 hours, perhaps not too much longer than that, because this is an accumulation period. The market has obviously accumulated. The manipulation is normally short and quite sharp. That's what our research has shown us. So generally speaking, we tend to exit the market around probably 75 to 80% of the time. We'll exit the market on the next day itself. So within 24 hours, we'll be out. So think about ways in which you can do that. We found that with insider bars, generally you want to exit the market relatively quickly. So don't stay in the trade longer than you need to. And remember, your goal is to catch this manipulation. If the market maker is looking to manipulate the price, then that's what you're looking to capture. So that's an overview really for you on insider bars. A lot more details are said on the Traders Toolbox video series, where we've actually gone into depth with the insider bar, and I've shown you 5 different exits that we came up with as a team, which we then actually went on to test. So you can check that out. Make sure you subscribe for our other videos on our YouTube channel. Again, it's always great talking to you. I know this has delivered lots of value for you. So thank you very much for the opportunity. As always, until the next time, as we always say, stay disciplined, follow your plan, and trade like a master. Bye for now.